They were. Okay.
I gave you permission recording now. So good morning, everyone. My name is Cheryl Adamson. I'm from the Parnell Business Association, and I'd like to welcome you all to our webinar on ethical investing. We've got some fabulous speakers today, and I'm going to hand over to Josephine Rudkin-Binks to introduce everyone. And this will be available afterwards. Abby will contact everyone who attended and send you a recording of the webinar so that you can pass that on. So over to you, Joey.
Sure, kia ora. So morena, everybody. Tēnā koutou katoa, ko Josephine, as Cheryl said. I also sit on the Parnell Business Association board. I'm delighted to welcome you all this morning to the Parnell Sustainability Webinar Series. This morning's webinar is on sustainable finance and the rise of sustainable finance. It's very fitting that we have this topic today because it's actually also World Investor Week. And part of that week is about raising education and awareness around investments. And what we have seen over the last decade is a real surge in interest for sustainable investments. As well as providers like A&P and others who are actually switching their portfolios to meet this kind of growing demand. I'm sure you'd be horrified if you realized that your KiwiSaver was investing in certain things like tobacco or manufacturing of arms, deforestation, or animal cruelty, animal testing, and that sort of thing. So there might be things that are quite dear to your heart that you'd be quite surprised and shocked to realize that your KiwiSaver support. So we have two experts here today to take you through a little bit about sustainable finance and the kind of rise and why that's important. But also I think one of the things is that you can actually do good and do no harm by switching funds. And so Barry's going to take you through a great tool that he's developed. So without further ado, I'm going to introduce Barry first, our first speaker. So Barry Coates is founder and CEO of Mindful Money. It's a charitable social enterprise that has a mission to make money a force for good. Barry's career has focused on sustainability since he attended the Earth Summit back in 1992. He's been a leader on ethical investment, fair trade, climate change and poverty in New Zealand, but also internationally through a number of roles, including a strategy consultant, CEO of Oxfam Aotearoa, which I think is when I first met Barry a number of years ago, as well as a Green Party list MP. Barry also received the SBN Sustainability Champion Award in 2016 and has a master's in management from Yale University. So really warm welcome to Barry, and I'm going to hand over to you.
Ngā mihi nui kia koutou. Thanks very much for inviting me. Thanks, Cheryl, for all your work in the Parnell Business Association. Thanks for that introduction, Joey. I'm going to talk through issues of investment, and particularly I'm going to talk about investment dynamics within New Zealand. So as we're saying, there's been a big transformation in the international kind of finance industry. And what's happened is there's been a big switch over towards responsible investing or sustainable investing. And we're going to talk through what that means and how much is real and how much is greenwash, and then we'll give you ways to find out a little bit more about it. And then I'm going to pass over to my fantastic friend and colleague Joe, who's going to talk about the broader issues of sustainable finance and this new forum for sustainable finance. So let me kick off with a presentation, kind of death by PowerPoint, but let's have a look at it. So here we are. Whoops, let's go back a bit. Sorry. You're getting a sneak preview of all the slides, I'm afraid. Okay, we'll start from here. This is my favorite chart of all time. What this says is basically finance for too long has ignored its real world impact. So as you can see, they're sitting in a cave, post-apocalyptic world, and they're saying, yes, the planet got destroyed, but for a beautiful moment in time, we created a lot of value for shareholders. And to me, that really says something about the way that the finance system has worked, that has worked according to its own logic, which is about risk and return, but without any reference to what finance does and its impact in the real world. It's as if the real world doesn't impinge on finance and finance doesn't impinge on the real world. And that's obviously a problem because we live in a world where we see the consequences of finance flowing to too many things that cause pollution, cause exploitation, cause unfairness, and finance now has to start becoming part of the solution rather than just being part of the problem. So we're going to talk through how all of that works. The first one we're going to talk about is investment strategies for taking sustainability into account. So how do you do this? How do you take sustainability into account in the way you invest your money? And particularly, I'm looking at it from the funds perspective. So if you're a fund manager and you've got money to invest across a number of different companies, how do you take these issues into account? Excuse this being a little bit complicated, but it's worthwhile just spending a few minutes to look through. On the left-hand side, you've got the traditional ways of managing money, and that means ignore the impact on environment and society. And that's still a large part of the way the world works. You move forward and you get into the area of kind of what I would call traditional ethical investment, where you screen out the sectors or practices that cause social or environmental harm. It's issues like avoiding fossil fuel companies or avoiding companies that violate human rights. And this has a long tradition because it's been part of the Quaker movement, for example, who are very active on not investing in companies that trade slaves. Or it was used in the anti-apartheid movement in South Africa. So we see there's a long tradition of this, and a lot of that for people who are investors is about values alignment. I don't want my money to go into companies that I don't think reflect my values. Then you've got the sort of ways that change can happen as well as that. So these are not mutually exclusive strategies, they kind of work together. The second one is engaging with companies to improve their performance. So what you do is you exclude the worst ones and you engage with others as kind of like an active shareholder to improve their performance on ESG, as environment, social and governance issues. And so I'll come through to some examples of that, but it's a way of saying I won't necessarily avoid everything that might be on a transition to improvement. Actually, I'm going to invest in them and help them move faster. Then you've got the next category is better standards. So that means you're investing in better companies. You're investing in companies with higher sustainability standards, like All Good Organics or Kathmandu, or any number of companies that have high sustainability standards. And already you're seeing kind of implications for kind of the kind of returns you can get, because as you invest in companies with better standards, what you often find is that those companies also do well financially. And then finally, on the right-hand side, you're into impact investing. And impact investing is where you invest to create a positive impact while still making a financial return. So rather than giving your money to charity or donating it, actually you're investing it and you're likely to get a return from it, but it still does social and environmental good. We'll come back to examples of each of these. So firstly, avoiding harm. We do annual surveys of the New Zealand public, together with an organisation called Responsible Investment Association of Australasia. My organisation, Mindful Money, does these surveys. And we ask the public, what do you want to avoid in your funds? And top of the list comes labour rights abuses and human rights violations. And that's over 90% of people say that they want to avoid these. And then you've got environmental degradation, kind of palm oil, the loss of old growth forests, etc. Then you've got social media companies that breach privacy standards, not mentioning Facebook by name. And then in the next category, you've got companies that don't pay their fair share of tax, and that's been right in the news lately with the revelations about more tax havens. And then you've got testing of animals for non-medical purposes. And that's really big in New Zealand. It's not nearly so big in other countries, but that's an important issue. Predatory lending by financial institutions, etc. So then you get weapons and firearms, gambling, tobacco, fossil fuels. When you get in fossil fuels, you're still about 74% of people want to avoid it. And then further down, you've got other issues. So I won't dwell on this anymore, but the thing that's striking about this is sometimes when you talk about ethical investment standards, people say, oh, well, ethical investment standards are all individual. Everyone's got their own ethics, and therefore you can't impose your ethics on everyone else. What the survey says is quite the opposite, that actually there's a lot of commonality along what people want to avoid in their investments. And so we use this in order to be able to tell people what they're investing in these categories. And we'll come back to how we do that. But the implication is in those categories, this is how much of KiwiSaver funds are invested. Now, this is dated to the end of March this year. And what it says is $2.3 billion is invested in companies around the world that test their products on animals. And it's testing their products on animals for non-pharmaceutical purposes. So that's primarily cosmetics. It's not for making life-saving drugs. Further down, there's $1.5 billion in fossil fuels. There's over $1 billion in companies that have systematic human rights and environmental abuse, etc. The other percentages are smaller, but still, they're millions of dollars. And overall, it's billions of dollars. So the total of this is 7.3% of all KiwiSaver funds. And we know this because we have tracked exactly what all 321 KiwiSaver funds invest in. It's a huge data exercise, but this is pretty amazing data. So this enables us to say where KiwiSaver funds go. And as you can see, there's a lot invested in things that New Zealanders don't want to have in their portfolios. And we'll come back to how you can find out. So again, not all of these are bad for your wallet. And you know, there's a myth that if you invest ethically, then you're going to do badly on your financial returns. And actually, this chart says one of the reasons why not. So this is the chart of fossil fuel values, and the top line is the average for the US market, the S&P 500. The bottom line is coal shares, and the middle line is oil and gas. So if you look at oil and gas shares up to 2015, they kind of tracked the average for the market. And then what happened in 2015? Well, suddenly people started understanding climate risk. The fact that if you're invested in fossil fuels, then there's a real risk of the loss of the value of your funds. And it's either through your assets, your oil and gas reserves being unburnable. So really they're not worth any value. Or secondly, there's a risk of higher regulation, and there's a risk of losing market share to renewable energy. So what we see is from 2015, the value of oil and gas shares of the companies has gone down dramatically. So if you have a portfolio, if you have a KiwiSaver fund, for example, that's invested in a whole lot of fossil fuels over this period, you've done really badly. So it's been a drag on your overall returns. So this is one of the ways in which investing ethically is not necessarily bad for your returns. In fact, it may mean that you can earn far higher returns. And that's been the experience across many different time periods and surveys. So those are things you can avoid. One of the things as Mindful Money we're doing is we're focusing on particularly egregious issues. So for example, 2 years ago, we found that $100 million was invested from KiwiSaver funds in companies that make nuclear weapons out of this weapons category. And so then we went back to the fund managers and said, you should get out of nuclear weapons because obviously the public are really concerned about it. New Zealand is not a country that wants to be supporting nuclear weapons. So a year later, that had reduced to 52 million. And then a year later, last March, it's reduced to 15 million. And as of now, there's really only one fund provider that still invests in nuclear weapons. So largely, the whole of KiwiSaver is largely nuclear weapons free. They're still investing in other weapons, but they're largely nuclear weapons free. So this is a way that we can use this data in order to influence the KiwiSaver providers. And it's been quite a powerful tool to do that. The second way to kind of do ethical investing or sustainable investing is engaging with companies to improve their practices. And the classic on this is ExxonMobil. Most of you, well, some of you may have read recently, was a big kerfuffle at ExxonMobil's annual general meeting. And what happened was a whole lot of the shareholders, like fund managers, ganged up on Exxon and basically kicked out 3 of their directors and said, Exxon's not moving fast enough on the transition for climate change, and we're going to replace out the directors. So that's using the muscle of shareholding in order to exercise corporate governance. And this is on the rise around the world. It's not only happening in Exxon, it's happening on the companies around the world, as increasingly there's a process of the fund managers, the people who have your funds and invest it, becoming much more active in governing the companies that they hold the shares for. And that's a really healthy development, because it's saying that they're now paying attention to the fact that they have a corporate governance responsibility, which previously they haven't had. They always voted with management and they weren't active shareholders. So now this is really changing the situation. It's changing for New Zealand companies as well. And increasingly we're going to see this kind of shareholder activism influencing companies. So obviously it's directed primarily at publicly listed companies, but it's also an issue for all companies where their investors may have these kind of social and environmental concerns. By those concerns, they're listed on this chart. So these are the different issues that typically are classified in what's called ESG, environment, social, and governance. So the governance, for example, you can see at the top of the chart is corporate political contributions or executive compensation or board diversity, anti-corruption policies, independence of the board. So those kind of governance factors. And then in terms of social factors, human rights, avoidance of tobacco or harmful products, community development, diversity, and anti-bias issues, etc. And then on the environment side, water use, natural resources, pollution, clean technology, etc. So these are kind of the issues that investors are now becoming active on in engaging with companies and in shaping their portfolios. It's good news that they do. There's another dimension, which is if you're a director of a company, then typically in the past, directors have been a bit confused about whether or not they can take action on these issues. But now the kind of legal opinions have gone beyond saying, yes, you can take action on these issues. Now the opinion, including this recent one from Chapman Tripp, are saying it's not just best practice to take these issues into account as a director. You have to. It's an obligation on you to do so, because your role as a director is to manage risk, to manage systemic risks. And so that's one of the duties of a director. And so they have to take account of these kind of issues. And legal action for neglect of climate risk in particular is on the rise. So that's a reason to look at these ESG factors, to take them into account and to engage on them. Then finally, it's, we want to live in a world where money is used for what people want. So people want to invest in these issues like social housing and renewable energy and good communities. So again, we did a survey, and this is the again from the last survey, the 2020 survey. So this is, people want to invest in renewable energy, on healthcare and medical products, on sustainable water, affordable housing, zero waste, native forests. It won't surprise anyone that these are the kind of issues that people want to invest in. And it's starting to happen. So for example, in terms of affordable housing or social housing, recently some mainstream funds, KiwiSaver funds, were invested in the Salvation Army social housing bond. So Salvation Army wanted to build 118 social houses in Auckland. So instead of just relying on government money, they basically put together a financial package with the help of an organization called Community Finance. And then Community Finance said, okay, here's a bond that can be invested in by mainstream finance. And a KiwiSaver provider called Generate KiwiSaver put $20 million in there. So for the first time, you're starting to see mainstream private sector finance going into these issues like social housing, and now other KiwiSaver providers have also put money in there. The community finance intermediary has put together a Aotearoa pledge, they call it, for $100 million fund. So you're starting to see the potential for scaling up on issues like affordable housing. You also see money starting to flow, of course, into renewable energy and other things. So this is going to be a really, really rapidly growing part of investment. And people are going to push through into this beneficial end of sustainable investment because that's where they want to see their money go. Unfortunately, there aren't many kind of opportunities yet for retail investors to get involved, for ordinary investors to get involved. So one of the things that Mindful Money and others are doing is we're mounting a campaign to get more providers to offer these kind of investments to the public. And the final aspect I'm going to talk about is science-based targets, and Joe may want to talk about this because we're working with the Centre for Sustainable Finance on this. But these are the kind of targets that will get fund managers to sign up to this idea that actually they can manage down the climate emissions of the companies in their portfolios. And this is really important because if we're going to take action on climate change, ultimately it's up to companies to reduce their emissions. So this is a way that when you invest in a KiwiSaver fund, we're going to be persuading that KiwiSaver fund to say, we'll commit to reducing our carbon emissions in our portfolios. And the ambition is that it would be in line with the Paris Agreement and the 1.5 degree pathway. So essentially, it's setting targets for zero emissions in their portfolios. So watch this space. There'll be a few announcements about that over the next month or so. So in kind of summary, investing mindfully means that you can feel good about your investments, you can align them with your values, you can do good because you're investing for a better impact in the world, socially and environmentally, and you can earn good returns, and particularly investing in things that are growing and becoming more popular in the future. So I'm just going to switch over and show you one way to find out more information about this. So excuse the clunkiness of having to go in and out. Here's the Mindful Money website. It's www.mindfulmoney.nz. Can everyone see this? Yep, cool. So in here, we've got a whole lot of information at the top around learn more and get involved, and we do annual awards, for example, that have been really successful. And we've got blogs and so on, all about learning about how to do investment with an ethical lens. So in here, the two main things, as well as finding out more information, that you can do is you can check what's in your KiwiSaver and you can find a more ethical KiwiSaver. So let's go into KiwiSaver first, and we'll go down to check a fund. And once you get here, you can choose your fund to add. Now, I'm going to choose the biggest fund in New Zealand, not to be unfair to ANZ, but they have the biggest fund in New Zealand is called the ANZ Growth Fund. Spell it right. There we go. And it pops up below. See ANZ Growth Fund. I click on that, and it shows you what the ANZ Growth Fund invests in. And as I follow my cursor over, you can see 2.4% in alcohol, 6.8% in animal testing, that amount in fossil fuels, and even better, when you click this fund details on the left, you can see the companies. So this is a way of looking at the same graph, but then here are the companies that they invest in. So they invest in a whole lot of fossil fuel companies, BHP Billiton, down here is Genesis Energy, because they've got holdings in the Kupe field in New Zealand, OMV, that's been active in New Zealand, Phillips Petroleum, Royal Dutch Shell, etc. So they're quite heavily invested in fossil fuels. And then, as you can see, they're invested in a number of other things, not so much in weapons. So that's 0.13%, so it's under 1%, so relatively small. Quite a lot in gambling. Some alcohol companies, familiar names, some companies that have a record of human rights violations, and companies involved in animal testing. So this data comes from a very extensive analysis. I won't go into the details of how we do it, but it's a long and involved process. But it starts off with the declarations that companies make to the company's office. So there's a very sound financial basis to it, and we send all the information to those companies to verify before we publish it. So that's one thing you can do on our website, and the second thing you can do is to find a more ethical fund. So say you go into your fund, you have a look at it, whatever the fund is, and you say, oh, well, actually, I think I'd like to look around and find a better fund. So here, we make it easy for you to do that. And we've got 3 questions about the criteria that investors have around these issues. So if you say, well, fossil fuels are really important to me and weapons are really important to me, you can use these sliders. I'm not so worried about gambling. Maybe I'm not so worried about tobacco. And you can go and complete these sliders. You can say which approach is important for me. And you can say, well, I don't mind so much about the level of fees. It's kind of like returns after fees that I'm more worried about. So I can kind of raise the priority of these or lower the priority. And then thirdly, you put in what your risk profile is. And this is a really important one, because if you're going to be in it for a long time, then you're going to be more interested in a kind of higher return over a long period of time, and you're going to be able to accept more risks. So we asked 3 questions, what's more important to you? And let's pick on the ones, if you're going to be into it for a while, then I want high returns, even if it means some ups and downs. I'm prepared to take a risk, but I'm looking for a decent gain, and I'm in it for a long time. And if you do that, then click at the bottom. What happens, we find the funds, the pre-screened ethical funds that meet your criteria. And that gives you an option. So Pathfinder is one of the more ethical funds on our website. Boost the Socially Responsible Fund. Mercer's got very strong engagement policies. Simplicity is a lower cost and a passive fund. So there's a range of different types of funds. And when you look at them, you can look at what they do. their past returns, and their fees. And if you want to find out details on any of the funds, you can go through to their fund details page. So when you're ready, you can go through to switch to this fund, and you're taken through to make an application to the fund. So Mindful Money doesn't actually own any funds. We don't invest. We just we're like a switching service. We point you towards those funds that you may want to invest in. So it's free. We're a charity, and we do this because we think that everyone should know this information if they're making investments. It's kind of part of democratizing investment, but it's also part of saying if we get people to be switching to funds that are more ethical, and we channel more money into the things that do good in society, that's a really, really powerful lever for change. And what we found out, for example, is that your footprint from your investment portfolio, your KiwiSaver or other investments you have, your footprint has got far more impact in terms of greenhouse gases and emissions than your spending does. So actually, by taking action on finding a more ethical fund and managing the way you invest your money, you can have a profound impact on your carbon footprint. And so for those kind of reasons, we really hope you do this, and I'll end the presentation there, and we'll have plenty of time for questions. But thank you very much, and I hope that was useful. And I'm now going to pass it back to Joey. Yeah. If I can get back to where are we?
That's awesome. I think, as you say, Barry, transparency is key, and this is exactly what your website provides, the ability that people can go through and have a look at their own funds and see where they're invested. And yesterday, I'm in the process of setting up a KiwiSaver for my 16-year-old. And so we were playing on the website yesterday, and I was running her through these questions. And I think, you know, you can start KiwiSaver at any age. And I think it's a great thing for being able to take your teens through as well, in terms of educating them for these choices. So thank you so much, and awesome that it's also free. So, okay, so next I'm going to hand over to Jo Kelly, and I'll just give you a little bio for Jo. So Jo is the interim CEO for Toitū Tahua, which is the Centre for Sustainable Finance. Jo's also the strategic advisor for B Lab Australia and New Zealand. So that is helping grow B Corps throughout Australia and New Zealand. And New Zealand's doing really well on the number of B Corps that we have. And we're going to be running a webinar next year on B Corp certification. And also, a number of years ago, Jo spent over 4 years as the Sustainability and Corporate Responsibility Senior Manager at Deloitte. So I will hand over to you, Jo.
Thanks, Joey. Kia ora koutou. Nice to be here. I'm going to share my screen, and I'm going to put you all through a scrolling presentation because I haven't got access to PowerPoint right now. Just give me a second. So can everyone see my screen? Yep. Okay, great. Let me just organize myself here so I can see you all. Sorry, can you see this screen here that says Sustainable Finance in Aotearoa, New Zealand? Yep. Okay, great. Sorry, I've lost it again. Just give me a sec. One display, the challenges of one display. Anyway, I think, sorry, I'm really having some challenges.
You might just have to lose the ability to see us, and we'll just see your slides.
Yeah, sure. There you go. There you go. I've got it. Okay, so what I'm going to do to follow up the wonderful, wonderful Barry is just give you kind of step back and give you a bit of an overview of what's happening locally in the context of what's happening globally with sustainable finance. So I think for most people, sustainability is quite an amorphous concept. And as if that wasn't sort of tricky enough to define and talk about, then you add finance to it and it becomes quite a mystery. So I think the first thing to do is just provide some definition to what we mean when we say the words sustainable finance together. And the good news is that there are quite commonly understood definitions. This one specifically comes from the European Commission, and it's one that is quite regularly used and well understood in the kind of community around sustainable finance. So what's interesting about this definition, which I'll read, the process of taking environmental, social, and governance, so ESG, considerations into account when making investment decisions in the financial sector, leading to more long-term investments in sustainable economic activities and projects. What's interesting about this definition is it provides you with the activity or the process, but it also focuses on the intended outcomes, which is more sustainable economic activities and projects. And so we've done a bit of thinking recently in Aotearoa, New Zealand, about what that means here. And a couple of years ago, a bunch of people got together through an organisation called the Aotearoa Circle, which is an organisation that is essentially a public and private partnership started by a very prominent environmentalist called Sir Rob Fenwick. And the mission of the Aotearoa Circle is to reverse the decline of our natural capital. And so for people who don't talk every day in terms of capital, it's to reverse the decline of our nature. The Aotearoa Circle works across a number of domains, but essentially they realize that if they want to achieve their mission, then they have to focus on finance, because there's an absolute relationship between the behavior of our financial system and the outcomes it drives and the damage that we're doing to nature. So they convened a technical working group of about 30 people from industry, iwi, government, and civil society. And it was led by Matt Winneray, who's the CEO of the New Zealand Super Fund, and Karen Silk, who's the general manager at Westpac. And they undertook a 2-year process of looking at sustainable finance initiatives in Canada and Europe, and looking out around the world to see what was happening and sort of answering the question, what does that look like for Aotearoa New Zealand, and how do we sort of come up with a plan? So ultimately, and I was part of the technical working group for the forum, as was Barry, we collectively spoke to more than 200 people in the 2-year process. And the process culminated in what we now affectionately refer to as 2030 Roadmap for Action. So the Roadmap for Action, unlike the definition provided by the European Commission, is about changing the system, not just about defining a set of activities for a certain set of outcomes. So the way that we have started to think about sustainable finance here for Aotearoa is considering all the various components and pathways that we need to put in place to achieve a fundamentally different system, one that has as its outcomes equity, inclusion, and one that's sustainable over the long term. And I suppose the main thing here to note is that for us, we don't mean anything less than transformation. So when we're talking about sustainable finance, we're not really talking about tweaking settings to do a little bit less bad. We're actually talking about, as it says in that third point, financing the transformation, a wholesale shift of capital into investments and businesses and initiatives that are doing more good. So we're really that sort of capital continuum that Barry showed in his slides, which goes from doing less bad to right out on the other side doing more good. We're working across that whole continuum, and we're working toward some transformation. So I'll just scroll down here again. And this is in, a very high level overview of the roadmap, which was the output of that process we ran. Essentially, this roadmap provides detail on what we mean by achieving the transformation. And so it has, I think, upward of 150 recommendations in the roadmap. And we just grouped them together. And these circles show how we have proposed to phase them out over time between now and 2030. So the recommendations are grouped into 11 categories, and that's what is listed here on the left: standards and pathways, responsibility, capability, which is an enormous need in Aotearoa right now, governance, data, disclosure, coordination, value, inclusiveness, and actually it's not just government leadership, it's leadership everywhere. And so if you're wondering, Joey asked us to, and Cheryl, to talk a little bit about how this relates to, you all and your business. And I think as Barry was talking, I was giving a little bit of thought to that. The answer is we've been talking for quite some time in sustainability circles about system change, and reiterating what Barry's just told us, this sustainable finance and finance affects everything. So we've sort of transitioned past the point of talking about changing the system, and we're actually in the middle right now of doing it. And as Barry said, global capital markets are going through this massive and very rapid transformation. And in Aotearoa, New Zealand, if our businesses and investors don't keep up with that, then we run the risk, quite significant risk, of not even just not being up to date, but acting in conflict with the targets that the global investment community has set for itself. And then what happens? We lose relevance, we lose the ability to be competitive, and we lose access to capital. So I think wherever you fit on that capital continuum, you're probably already feeling the shifts in consumer preferences. And as Joey said, movements like the B Corp movement are a direct result of those changing preferences. And those shifts are now echoing in the investment community. So people are looking to invest in and work in and buy from businesses that really have a handle on their impacts and a handle on their risks. And they don't just want to report, right? So there was a period of time, and I've done this myself, where you could just make a nice report and that would be sufficient to get you by. But people now want to see that you have the practices, you have the policies, you have the things in place, so you can genuinely, and transparently show that you're reducing harm. And, if you're doing really well, maybe that you're also increasing your benefits on communities and on your workers and on the environment. You probably also, Barry touched on the notion of stakeholder governance, which is quite topical right now. And there's a lot of discourse in New Zealand at the moment about fiduciary duties and the role of directors in creating value. So I think that that's a really important part of the conversation about sustainable finance. And I think if you are a director, you really need to start to consider, do you have a handle on how you're affecting a broader group of stakeholders? But sort of regardless of where you start on the roadmap, it's going to meet you at your doorstep at some point. And I think that that's probably the key, message for this group. It'll show up for you somehow, and it's not a hypothetical at this point, it's actually happening. So the last point there, number 12, which I see now actually I've got there twice, but the last point is around coordination. And doing the roadmap made everyone realize, okay, if we don't have an organization that takes some responsibility for, tracking progress toward this roadmap and catalyzing action to achieve it, then it's going to be very difficult to get there. And so in July, we launched Toitū Tahua, which is the Centre for Sustainable Finance. And I think this could be the New Zealand definition of sustainable finance. It's our name, which was given to us by Ngāti Whātua Ōrākei. So Toitū Tahua relates to the sustainability and protection of the environment and acknowledges the importance of financial investment, new thinking and collective action required to achieve a robust and resilient financial system and planet. So it's just one definition, but we kind of like it. So our purpose, our sole purpose, and again, nothing less, is to realise the recommendations of the roadmap. And in order to do that, we're only 3 months old, but we've organised a number of what we call implementation groups who are all voluntary, and they're working initially over the next few months on the interventions here in the right-hand column. So in the left there, you'll see how we've organised the group, and on the right, you'll see what the priorities are for each group. And so just to give you a bit of kind of detail, in inclusion and equity, we're looking at the development of new institutions that are specifically focused on including and creating access and participation in financial markets for people who are currently excluded. In banking, we are looking at a very urgent need to build capability for all the reasons I just explained, and also the need for banks and other investors to access data that they can use to help to inform their decisions. And specifically, we're focused at the moment on the provision of climate data that people can use to model out risk and understand different scenarios. We're also looking at the sustainability guidance that governs the way listed companies report on their sustainability performance. And we are working with partners like the IOD and others to really understand and highlight best practice in governance and build capability in our directors community. We are working on a stewardship code, which is a code that sort of governs the behaviours and decisions and reporting of our investment community. And with Barry, we are working on, what will we say, Barry? Wrangling some investors to make net zero commitment. I think initially wrangling and then at some point celebrating investors who are making net zero commitments, especially looking forward to Finance Day at COP, which is early in November. And through our education and capability building work, we are working with EY to deliver basically a sustainability 101 that's aimed at giving this sort of terminology and basic concepts of sustainable finance and sustainability to all people who work in business, so at all levels of the organisation. And we're also working with a group of universities to undertake a needs assessment for the private sector to determine what is it that people need to leave university with to be not only employable in the private sector and the finance sector, but also abreast of what's happening globally. So I suppose the other thing I wanted to note here is that we recognise in coming up with this roadmap that we have to work essentially in the opposite way than what we did to get to the roadmap. So that process sucked in a bunch of views and insights from a huge community into one kind of shared plan. And actually what the centre needs to do is flip that and say, okay, we have a plan, now we have to turn it loose. And we need people to step into the spaces that we've identified and lead the interventions that can move us forward at the scale we need to make the roadmap come to life. So we don't hold this plan because at the moment we're, a couple of people, but we're sort of catalysing the partnerships and the collaboration required to realise the plan at scale. We've been really lucky. We've got a lot of momentum. Many of the actors in the financial industry and professional services are stepping forward. And so just to quickly give you an overview of the leadership group that we have, these are people who have come forth and said, I will do this and I will commit to personally driving forward one or more of these areas, which are the parts in blue. And, you know, everyone's working voluntarily and they are really committed to this movement, which is not the type of movement that you see in the streets or with the activists. It's much more aligned to the way that Barry is operating. It's people, you know, who care and who are in the system, thinking about where the money sits in our society and where it needs to go, or where it might need to stay, as the case may be. And so, yeah, I think that's probably a good place to stop and take questions. But I guess that one of the key takeaways, and we sort of get asked a little bit the question, okay, so what about me? Or, you know, what can I do? And for this audience, or really any audience, the answer is just get in the game. You know, if you feel like, as Barry said, there's something you can do with your KiwiSaver, or there's a way that you can think about your business that makes it perform better in terms of its impact, then just start and take confidence and comfort in the fact that these are very new definitions. There's a whole lot that people know, including this group, and there's exponentially more that people don't know. And so if you try and you step forward into the space, people will catalyze around you and support you. But the moment really has passed of opting out or not trying. Yeah, thank you.
Thanks, Jo. That's awesome. And thank you, Barry, as well. I mean, I think it really shows that you can do well and good at the same time. We've got just perhaps time for one or two questions. So I would like to open the floor if we've got any questions. I don't think anything's come through the chat, but any questions at all from the audience? Silence.
Let me add something in the space while people think of a question. You know, when Jo talked about how does this impact on kind of every business, I think in the past what's happened is there are lots of reasons to become more sustainable for a business. Your customers want it, it's good for your employees, you avoid environmental liabilities and so on. So there are some good sustainability reasons. What's often happened in the past is that directors have been reluctant, or the financiers of the business have been reluctant. And I think what we're seeing now is a change where it's kind of switching around. Instead of finance being a barrier, finance is actually starting to become part of the solution. They're part of saying, actually going in the direction of sustainability makes economic sense, makes sense from a finance perspective. And I think for many businesses, that's a real change. So for example, you see that, you know, Nestle buys a whole lot of things from Fonterra, and Nestle is now saying to Fonterra, unless you drive your emissions down to zero, we can't buy stuff from you because we, as a company, have made those commitments. And then Nestle's shareholders are saying the same thing. So you see right through the sustainability chain, you've got powerful levers that are actually really starting to make a difference in that direction towards sustainability. And I think that's really a fundamental change.
Thank you, Barry. You're on mute, Cheryl. I can see Cheryl talking, but she's on mute.
Excuse me, as the host, I should have seen that. Thank you so much, both of you, for your contributions. It was fascinating. And as I said, we will circulate this and hope more people will take some time to actually listen to it. It was really excellent. Thank you, everyone. Have a good day.
Thank you, Barry. Thank you, Jo.
Thank you.
Everybody.
Thanks all.
Thank you.
Cheerio.